Hello. Oh, double check. Uh, we are getting started with our live stream. Welcome to our live stream today. We are getting started. Getting started in our live stream today, so this is going to be a little bit good live stream as we have always had. We are getting started with our live stream. Everything is going to be okay. Okay. So we are beginning our live stream right now, just checking on all our streaming platforms. On our streaming platform, so we're going to be streaming live. We are streaming live, guys, so we are getting ready. Okay, I don't know, that should be the one. So, all right, so welcome to our live stream. Okay, we're getting ready. Team, I think we are starting in a minute. Let's hit. This is our live stream today, and welcome everybody, and welcome everyone to our live stream. And today, our market is opening, I think, in about 12 hours from now. We're using the New York time for trading, and it's very important that we look at key things before the market opens. Most traders lose money when the market opens at open. So it's a simple guide for beginners, but trust me, you will enjoy this quick. It's going to be a good one. It's going to be a good, quick discussion that we will run for about an hour here. And of course, by the time you prepare to do trading today, you would have mastered so many good tricks to help you with your trading. Okay, just double check one more time. Our market is opening in about, when you check here, our market is opening. The market is closed due to the daily break. And of course, it will be open in 12 hours, 43 minutes. We'll look at the charts, and we'll also look at key things during the time when the market opens. But if you are here, it means you want to trade smart and you don't want to trade with emotions. So right now, the market has just reached the 12 hour to the opening. And of course, This is the most important thing for new traders before you join the market, before you begin trading. And remember, today we are going to talk about everything that we look at in most of our tradings. We've done this on our platform. We really talked about precision, discipline, liquidity. Those are key things that we look at. We also created a very good website here for our viewers. Be sure to check it out. We have mentorship courses here, and of course, one-on-one. Then we also have the actual courses here. We're working on the enroll button, but for now, you could use the contact and send us an email to support. Our WhatsApp community is also there, and you can check out our YouTube uh, uh, our YouTube page for the demo and for the live tradings. But we will always do the free version where we will still open introduction to market or introduction to forex market. And of course, we're looking at how to read candlestick, basic technical analysis, setting up your demo account, understanding pips, lots, and leverages, and also basic risk management. We can't fail to talk about risk and also trading psychology. But of course, remember one thing that if it's actually upon you to trade in gold, because why gold? Of course, gold trading, it's the most important thing, uh, dominates the gold market. Of course, the XAUUSD basically is the most traded commodity in the market. Of course, we have our specialized strategy that helps thousands of traders achieve consistent profitability in a volatile market. Gold is very volatile for those of you who have traded in gold. And why gold? Gold offers unique advantage that makes it one of the most profitable instruments for skilled traders. Given the fact that there's that war between Iran and Israel, a lot of traders are very happy. They know that whenever there's war, it's basically there's going to be a bullish trend in our market. Okay, not to talk about most of the things, but back to the point, why most traders lose money at open. When our market opens, why do most traders lose money? Today, we are not gambling. We are trading structures. We are trading liquidity. We are trading confirmation. So if you're here, you will understand clearly that we are going to talk about structures, liquidity, and confirmations. If you're ready to learn, please stay tuned up to the end, because I will give the tips how to enter the market and how to handle risk and your psychology at the end of our live stream. Please be sure to like the video, subscribe if you haven't, and let me know what you think about in the comment section. Gold, of course, we talked about gold. Even when you come to our website here, we really emphasize gold trading, because gold trading dominates the market. That's why we really emphasize gold trading. Nothing else. We would have traded Bitcoin, or we could have actually traded the actual Ethereum that you can trade throughout the week. But for gold, the market runs from Monday to Friday. And there are weeks that you won't be profitable, and there are days that you won't be profitable. So take trading as a business, that every time you go to your shop, you open up, today you'll make profit or take losses. So you need to understand when to set your stop loss and when to set your take profit. All right, in our today's discussion, just like I mentioned, today we are not gambling at open. When the market opens, we are not gambling. The market is going to open in about 12 hours. We will be trading our structures, liquidity, and confirmations. Looking at candlestick, we emphasize on our channel that candlestick is one of the most complicated things to follow. Avoid chasing bullish or upward trends, or chasing higher high, okay, or higher lows. Always have a trading strategy or structure, liquidity and confirmations. You need to know the points of resistance and the points of supports when entering any trade. Today, we are not gambling. We are trading structures. We are trading liquidity, and we are trading confirmation. If you're ready to learn the real strategy, I've said it, please stay until the end. I'll give you some of the things to remember. So before we start, remember, the goal is to coach everyone. The goal is not to catch every move. So remember, our goal is not to catch every move. You come here, you are chasing high, you see here, there's green, you jump, you buy. Then you see another green, you jump, you buy. Scalping, of course, but we'll give you a good strategy for scalping, I mean, and also swing trading, scalping and swing trading. Whenever you see red, you buy. You see red, you sell. You see green, you buy. That's not what we are doing. We are looking at liquidity, a point of support and a point of resistance. So when do we enter the market? So that's the most important thing that we are looking at. And of course, one thing that you should know is that the goal is also to catch one clean move. If we catch one clean move, like here, let's say you looked at the resistance here and the support was here. So, and you were able to place your trade above the support when it was above this candlestick. So you would actually trade for about 30 pips points, or percentage in points, maybe 30 or 40 pips here. You would take some good profit. If you look at our close trades, okay, we have a number of close trades with some good profits that we managed to take. So that is the beauty. So to catch a scalping strategy in a clean move, and we are not going to gamble. Remember, before we start, always remember, one, the goal is not to catch every move. Two, the goal is to catch one clean move. One clean move in our market, like here, it would have been a good clean move, or we take on a swing trade, we trade for at least some good minutes. And remember, we have a lot of indicators and we're doing a 5 minutes trade analysis. But of course, I always tell you, whenever we're doing trade analysis, we do it in 15 minutes or 10 to 15 minutes. But when we are trading, we take it in 5 minutes. All right, so that's one thing that we have to look at it right now. Okay, let's look at one other thing in our trading, the higher time frames analysis. We're going to do time frames. It's not about all the big screens that you have in front of you. It's about trading with the right 1 hour time frame. If you're going to trade, you're not going to spend all the 24 hours trading. Within your time frame, you need to look at a higher time frame analysis, which we are going to look at a 1 hour. Let's start with a 1 hour time frame. And of course, this live stream is going to run for 1 hour so that we can look at, are we trending? Are we ranging? Are we at major resistance or support? Those are things we have to look at. And of course, if you're a trader and you're still using mobile phones to trade, you are not a trader, because you really need that big screen to analyze your market very well. look at the time frame analysis very well for you to take on the trade. All right. So profitable market open strategy. Profitable profitable market open strategy. Liquidity sweep plus structure breakthrough. We're going to look at this, but let's first talk about the time frame analysis. And of course, we're going to talk about this time frame analysis briefly as we hit a few discussions here. So while we look at this chart here, let us start with a 1 hour time frame. So a 1 hour time frame, it's going to be, we're going to have a trade between, okay, let's look at the last 1 hour time frame. So here it's the trade from here. So 1 hour time frame. So we're going to start from 9 to 10. This, okay. So I will do a 1 hour time frame quickly. So this is a 1 hour time frame that we're going to look at. Okay. All right. So in the 1 hour time frame, we are going to look at the major support and resistance. One thing that you need is that we are trading a 5-minute chart alone. And of course, this is how most traders lose money. Now, here, let's look at one thing. Prices has been making a higher high and a higher low. What is a higher high and a higher low? So this higher high is that this movement here, it's a bullish movement. From here, it's high, then this is higher high, then this is higher low because it's in the bullish direction. Higher high, higher low. I can draw that for you. This is higher high. I can draw it up to here. And then this is higher low. And then this is higher high before the market close. All right. All right. So that's really, really cool for us to look at it in our market. So this movement of a higher high, higher low, higher high, because it's in an upward trend. If it was going in a downward trend, it would be lower low, lower high, lower low, lower high. So let's take, for instance, uh, we were trading around this zone here, this market zone here. We could make it around here. So this has been, I think I have a lot of drawings here, but it's okay. We can look at it like the trade has been coming in the bearish direction. Okay, so this is what we refer to lower low. This is lower low, and then this particular one is lower high, and then lower low because it is in the bearish direction. So we need to look at all those concepts when analyzing our chart in our 1 hour time frame. So our 1 hour time frame is basically this time frame that we're using from right from 9 to 10. Okay, from 9 to 10. Okay, from here to here. But I just decided to also pull it a little bit so that I could come to about that hour when the prices has been going up. So in our stream, guys, or we will still look at one thing. Are we at major support and major resistance? So this is one thing that we have to look at it. And thank you for joining. Don't forget to like the video, subscribe if you haven't, and let's know what you think about. So now, because when the market opens, it's important if you look at all this, like price has been making a higher high, it tells us that the buyers are in control. Whenever you see the price going upwards in a bullish direction, it shows that the buyers are currently taking control. And of course, you also need to notice one thing, that when the market opens today in about 12 hours, in the first 30 minutes, analyze your chart and look at it whether it is a higher high or it is a lower low. Look at the direction. If it is a bearish, you wait to take the trade. Only take the trade after a pullback and a confirmation. So that's when you take the trade. And also notice one thing, that at this level, we are looking at the previous chart. Remember, this previous chart does not guarantee future chart. That's why I even said it on our website here, that trading Forex involves significant risk. Past performance is not indicative of future results. This is not a financial advice. Okay? So whatever you see here doesn't mean that the price or the graph will continue going up. Always look at your chart, know when to set your take profit and stop loss, and you could go and do other things. You don't need to be in front of the computer all the time, but you need to do the analysis, the market structure analysis. So now let's look at one thing. Gold, of course, we expect volatility, but notice that this is the previous level of resistance. Resistance is up here. And of course, the level of support is here. This is the level of support. Okay, so we had our support here when we had the lower low here. I'll draw it all the way here. And then that is the support. Then we had the resistance just around here. That was the highest resistance. So I could write here. We could also look at the previous ones. So the previous resistance, I could pull this. I always like looking at all this from, this was the previous resistance, okay? I could pull here. This is the resistance. And then the previous one, I can also pull this one back. This was the support. Actually, from around here, it was quite clear for us. I think this is the best zone for us to do our analysis. So this was the support. Okay. So in the support zone here, we have been seeing a lot of lower. This is higher low because it was going into, okay, this is lower low, lower high, lower low, lower high, lower low. And then it started becoming an higher high after breaking the support resistance when this candle wick cross our support zone. So that means buyers decided to jump in, trying to push the market to go up. So here, within the 15 minutes, we can also understand something, that we look for consolidation areas where the market is consolidating. Yeah, so like here, what are the liquidity zones? Okay, of course, we know very well that it equals to the higher high and higher low. So these are the liquidity zones that we are looking at. And of course, why? Because market opens, market loves to open to take liquidity first before the real move begins. So before the real move starts, like here, market loves to look at where there's that point of liquidity. And of course, we're also going to look at some of this strategy very well. And let's first hint on something here in our talk before we get into identifying some of the liquidity swipes, okay? And of course, a lot of you might also ask other questions like, what is liquidity? Okay, it's okay. You could ask that question, what is liquidity? It's a very important thing for you to know what liquidity means. So in finance, I would tell you that liquidity is that is the available liquid asset to the market. And of course, it's that can easily be converted into cash, okay? So liquidity refers to the ease in which an asset or a security can be converted into cash without affecting the market prices. That is what liquidity means. Okay, having understood liquidity, identifying the liquidity swipe, but here are the things to identify. Whenever you look at liquidity, every time you look for the price breaking previous high, and then there's a strong rejection. Or you look at the price breaking previous low, and there's a sharp reversal. So let's look at those key things in our chart. Okay, so in our chart here, where is that point when the price is breaking? These are the points where you look at it's breaking lower low, just like we clearly say that look for that part where there's that sharp reversal. Reversal means going up. So we could look at this also clearly in our chart here. Look for points where there's that sharp reversal. Like here, it's going up. It's coming low, then it's going up immediately. That is a very strong reversal. We will do most of this analysis very well. All right, so let's look at some of these concepts. Like how do we understand a strategy? And how do we understand this strategy now before taking on our trade in the next 12 hours? Now I will explain the strategy we are using today. The strategy that we are using today is basically what I've been explaining here. Identify the liquidity sweep, and break off structure. So this liquidity sweep, step one, I'm going to talk about how to identify liquidity sweep. Step one is to wait. We wait. Never enter the market. Never enter immediately at when the market opens. So our market is closed in about 12 hours and 19 minutes, the market will be open here. So when the market opens here, because you've seen the red candlestick, that doesn't mean that you should now enter this market at this point. You can take the trade. I think these things have even like these square blocks. You can take your trade after the 9:30. Like you can take the trade after, at least after the first 10 to 15 minutes are emotional candles where it will try to move in the bearish direction or in the bullish direction. And of course, many traders, because of the Iran war, people are expecting the market to take the bullish. But in the first 10 to 15 minutes wait, that's, I think market, the New York time is that the market opens at 9 a.m. So between 9 a.m. to 9:30, do your analysis. 9:30, then you can take on the trade. That is what we refer to the identifying liquidity sweep. So then step 2, we look for liquidity sweep in 1. That means price will break the previous high and rejects. So we need to look at that point when price breaks the previous high and rejects, or price breaks the previous low and rejects. This trap breaks traders, because when you look at those kind of, let's look at it here in our previous chart. So you see here, the price breaks the previous low and rejects and goes into the upward direction. And then price breaks the previous one. This is the previous one. The previous high, it has broken it. And then it goes, it rejects, and rejects means it rejects going up and comes down. Here means a lot of sellers are trying to push the price of the gold to go down. While also here, the buyers are also trying to buy so that the price could go up. And that is how the market works. Step 3, wait. We wait for structure basically to break. You have to wait for a structure to break. Like at this point here, there was a lot of resistance at this point. And of course, where there's resistance and liquidity, that is the point where you have to be patient, because anytime if you see that there's a lot of resistance in the trade, you wait to enter the market. Now, like at this point, you wait, and you know very well that at some point, when it breaks above, okay, you could, I'll just draw like, so if it breaks around here, you can enter your trade here because it has broken above your resistance zone. So in that way, you will be able to make the good profit. So if price sweeps low and then breaks the structure upwards, just like this, this is a confirmation that you can actually buy. And of course, if you buy, the price will sweep. And once it sweeps the high and breaks the structure downwards, okay, breaks the structure downwards, this is basically one thing that you have to understand, that no confirmation, no trade. If you don't see any confirmation, don't trade. Please pause and look at one thing. Pay attention. Don't do a lot of predictions. If you do a lot of prediction, trading is not about prediction that, oh, at this point the price will go up, then at this point I will enter. In that way, you won't become a profitable trader. So let's watch this live market. And of course, we're going to take on our trade tomorrow. Let's see if you have a live stream that is coming up tomorrow. Okay. So we have another live stream that is coming up for second. It's actually here. After this trading, there's a live stream that is coming up here. Please turn on the notification. It's on second. It's happening at 5, exactly 9 a.m. the New York time. And we will trade for the whole of this coming week and then the other week. So that's one cool thing that we can look at when doing our trade. So let's look at one thing also, that live market is a very important thing. Let me give you one quick narrative. Right now, if you look at this chart, we are not doing any trade because the market is not live. The market is closed due to the daily break, and it will open still in about 12 hours, 13 minutes. So if you notice here, it's kind of like difficult for us to have watch our market live, but you can watch our previous videos. And also one thing, we do not chase candles. We do not chase candles. It's going up, I'll take a buy. It's coming down, I'll take a sell. We do not chase candles. Understand the difference between a swing trader and also a scalping trader. So scalping, you take trade for about 15 to 10 minutes. Swings trading means you take trade for a long hour, like for a day or a whole week, or even for 2 hours. That's swing trading. And there's also one thing that you need to understand here, that we look at the wick that shows rejection. And of course, if we look at those wicks that shows rejection, these are the wicks. These wicks that are showing rejection that comes below are what we look for. Like in this, these are the wicks. So probably in this candlestick, these are the wicks that are showing rejection. This is a very good demo for the wicks. So many traders enter here emotionally, and then the price reverses and they start panic. When you see the price is reversing, do not panic. Do not panic. Please wait and wait. If sweep happens, that means there is a liquidity that is being taken. And now we can wait for the structure to break. And if nothing happens, never set up, and there's no setup, and it's also fine. Remember, no setup is also a position. So if you don't have a setup to enter the trade, that's also cool. And of course, we're going to have some of the trading setup forms later when our market opens. But for now, we may not do that. We now know how to identify our liquidity. And of course, we have also said it clearly that liquidity is basically what can easily be converted into money. Of course, in finance, liquidity basically the available liquid asset that can easily be converted into cash. All right, so we are looking for price breaking the previous high, and then there's that strong rejection. Then we also look at price breaking the previous low, and then that sharp reversion. That's when we look at identifying the liquidity sweeps. Now, we need to understand entries. There are entry rules here. Before you enter any market, one thing I always tell everyone who is doing trading from our platform, before you enter any market, it is always important, okay? First, if you don't have a setup, form of a setup, if your candle closes strong and breaks the minor high, this is our strong entry trigger. So let's look at this entry points. So there are entry rules that we are going to talk about here. Let's understand what you are buying and selling. For buys, after these are the entry rules. If you're buying after a sweep of low, bullish engulfing, structure breaks upward. The structure is breaking upward. Ideally, when you look at it here, a structure that is breaking upwards, like here, you can buy. And of course, do not buy at a higher high. No, always wait for it to give you a pullback, like at this pullback. And then at this point, this market zone, then you can take the buy. All right. Then also, you look for a bullish engulfing, that V candlestick. Then the structure breaking upwards. Then for selling, after the sweep of a higher high, okay? The sweep of a higher high, like here, this is a sweep of a higher, then higher, higher, then there's this sweep. Actually, this is a pullback. So in that pullback, it now gives you a clean indicator that it's going to be a bearish engulfing. It's taking a downward or a bearish break. So you can sell. You can sell when the price is going down and buy when the price is going upward. It's going downward, you sell. It's going upward, you buy. Upward is bearish, no, bullish. Downward is bearish. Okay, so risk management. Now, before we conclude all that and jump into our risk management, one thing is that it is very important to run your trade with a small risk. The small risk, always, whenever you have a setup, the stop loss goes below the sweep low. Why? Because if the price breaks that again, our idea is going to be invalid. Like if the price breaks below your stop loss, our idea becomes invalid, and you take your loss and you analyze the market, put a setup and join the trade. Also, one thing that you should understand is that it's very important to set a stop loss, but stop loss most of the time is that you're not willing to lose that money. You've put like 500,000, but every time you're going to trade, put the money you are willing to lose so that you can trade with a lot of discipline, with a lot of confidence, and you don't panic. So small risk. Always, if you have like on our account here, we have 627, around 600. Remember, you only risk 10% of your trade. So important thing to note, we risk 1% or 2%. Those are the lot size of around 0.2. And of course, we will talk about the lot sizes a little bit later. So 2, do not move to the loss emotionally. Emotionally, do not move to the loss. Let the trade work. Okay? Don't move into the trade emotionally, let the trade work. And if trade runs, secure your partial profits and protect your capital. The most important thing is that each and every time you enter the trade, like now, if I enter trade like in the few hours from now, those are probably 12 hours from now, I will know that my capital is $600, I mean, $600, 600 USD. So I need to secure it. Now I have 27. So I need to see how I can grow this 27 to a profit of 200, because we started uh, this profit from, we started with our capital of 100, and we have made so much, not so much, but we have made like 500. But remember, if you make $500 every single day as profit, do you know in a month, in the whole month, you can reach your 10K goal, the 10,000 goal. And once you hit the 10K goal, you take trades for 2 months, and 2 or 3 months, you can be able to get your first car. Just like we have some hint here. I think it's just best here. So if you hit your trade, you can actually pay for your car. And of course, this is what we are looking at when our market opens, and we are going to trade for this month and next month to hit our 20K and get ourselves this new ride. And of course, I've shown it to you. If you have the money, take it. It's a good, cool ride. So that is the strategy. So need to know when to protect and when to take your profit. So never get revenge trade that I've made a loss, let me go and revenge. No, you will lose money. If the first trade fails, stop trading for a sessions, avoid over trading, because gold is volatile. That's one thing that you should know. Gold is volatile, avoid over trading. But also one thing that you should know, secure your capital. Always protect your capital first. Do not lose your capital. And then if, just like any other business, if you trade, make sure that that is what you should be able to find out. Then stop the hit, stop, set the stop loss in a way that it is always, once it hits the stop loss, it saves your capital. Then stop losing money. Losses, that's fine. If you hit a stop loss of small and you have your capital, it's okay. Losses are in business, and also losses are business expenses. So we do not trade revenge. Please do not trade revenge. It is very open. It is very important for us not to trade revenge all the time. Okay? Like I've made a loss, so I'm going to revenge. Never do that in trade. All right, so let's go back to our mentorships and our blogs here. So in our mentorship and blogs, we always talk about psychology. building a trading routine that actually works. Consistency comes from routine. You need to do this every single day. And of course, consistency comes from routines we break. And of course, we break down the exact pre-market during our market and post-market routine. For most profitable traders, I've put this in our blogs. I've not put a complete article. Remember, I'm developing this clean website from scratch, and that is the most beautiful thing. So here are things that we can look at each and every time we do our trade. One, we need to have a psychology of one thing. Let me tell you, my viewers, for those of you, if you haven't subscribed to our YouTube channel, please, this is a time I'll talk about it. Please come and support us. Subscribe to our YouTube channel, okay? And of course, this is something that I want you to follow. For those of you who are just watching us, and please join our market, follow us. You will learn every single concepts here. And trust me, we can tell you 100% that trading will get better and better. Subscribe here. We trade discipline. All right. Enough of that. Let's come to our website. Please always come to our website, understand gold trading, which we always talk about. If you want to be profitable, take to gold trade. Gold is volatile. Yeah, volatile means, yeah, one thing is that it offers a unique advantages that makes it most profitable instrument for skilled traders. Okay, so this is what you need to do. You can join our academy if you haven't, and let's get to our trade. So we have not done a lot of analysis. We will do most of the things in our live analysis. We're just preparing ourselves for the next trade that is coming up right in exactly. The market will open in exactly 12 00 hours. So if we check our time is, when will the market open? Probably those are some of the questions we could get from other people. So it's exactly 2 p.m. East African time, but our New York time, it is exactly 6. Okay, it's exactly 6 a.m. Sunday. So we trade using the New York time. It's 6. So in about 12 hours, that means at around 6 p.m. today, 6 p.m. New York time. Okay, remember East African time is 8 hours ahead. So 6 means the market will open. So for those of you who want to trade in about 12 hours from now, so from now it's already 2 up to, so around 8 in East African time. Okay, around 8. So this picks up our time. Know your time zone, but always trade. It's 2 p.m. If you add 12 here, 12 plus 2, that's going to be, it's going to be at 12 plus, it's going to be at 2, 6 hours. So that's when you take on your trade. But of course, set the notification in the New York time. It's coming soon. All right, let's hit one more thing that we haven't talked about. Common market mistakes when the market opens. So when the market opens, learn one thing. There's that, let's learn one thing that do not enter the market immediately. Wait until look at your chart for 15 minutes. Then also there are over leverage. Then also one thing, try to look at one thing, trading without confirmation. That one you will lose. Okay, common mistake. The first mistake is that you enter a market immediately. The second mistake is that you over leverage. Okay. Then the third mistake is that you trade without a confirmation. You will make losses. And also making moves to stop losses. Those stop losses that you put right below that are too low, you can make mistake. And then also the trading revenge. So before you take on any trading revenge, always have one thing, that discipline is more profitable than intelligence. Don't use a lot of intelligence. Try to be disciplined. Remember the golden rule here is discipline is better than strategy. That is the big thing that I will tell you. Professional traders lose small and win bigger. Professional traders take that small profit. Don't say that today I want to make a revenge and take $1,000. It doesn't work like that. Take that small money. Amateurs win small and lose big. So you win small amount of money and you're losing big. You blow up account. That's why people are crying that trading is a scam. Trading is a scam. Trading is actually not a scam. If you're a profitable trader, you will say trading actually works. If you lose money, then you say, oh, trading is a scam. I always keep telling people that in the golden rule, there are things I look at. One, I'll tell you all this is that you want to trade, you should be very, very disciplined. Amateurs win small and lose big. Professionals, traders lose small and win big. Discipline is more profitable than intelligence. Now, one thing that I want to tell you is that you need to also know there are a lot of so many talks here on trading, but you need to understand one thing, that um, everyone wants to be an influencer, try to try to influence online or trade, but to be a forex influencer. But one thing that you should know is that trading, if you're a real trader, it always requires a lot of transparency and discipline. So if someone is training you on a demo account, that doesn't mean that the person is not a real trader. He's actually giving you all the skills he mastered. We do live trading. There are a lot of fake traders giving you those abnormal figures, how to make you a 10,000, how to make you a how I made all those things. Of course, there are others who make, but the best broker is Xness. So get to know that. And most people can't tell when to buy and when to sell. And the reason is because they don't have a proper structure. They just enter into the market. And of course, blowing up an investor's account or blowing up an account, if someone gives you money and then you deposit on them, if you are unable to deposit, that means that account withdraw. That means, of course, it's good to use them account for trainings. They are very good. Yeah. Then also one thing you should know, that the current performance or the current chart results does not influence the future results. Then of course, high risk, you make more money. If you're a high risk taker, then you're ready to make more money. But if you're not a high risk trader, you take less money and make a small profit. But of course, I said professional traders win with discipline. And then teach people how to help others discover the path to financial freedom. If you really want to be financially free, with the golden rule, once you enter trade, if you want to enter trade, yes, you can enter trade, but know one thing, that you can also be very disciplined, have strategy, and then we will teach you the path, how to trade, and then discover your path to financial freedom. And of course, it's not when it comes to our trading, is that we have a website here. We have courses here. Let me talk about these courses at Rico Forex Academy. We have courses you can take with all these skills that you've benefited. Is that if you go to school, it's an education. You pay for education. You need this knowledge to trade. Choose, of course, you can choose whether it is, we have free courses here. Forex fundamental, it's absolutely for beginners and it's free. That's why we give you absolute beginner training here in our chat or our channel here. But you need to invest in knowledge, invest in your trading education. Once you invest in your trading education, then yeah, classes are ongoing. You can reach us or contact support, write an email to support@Rico. We will be able to onboard you in our trading classes. For gold trading, we actually only do gold trading. That's what we are. We are actually gold specialists. That's what we have invested in. Okay, so we have building Forex education, and this academy is going to help you meet with world-class trading educational experts here that can actually, you could meet me as the founder of this. Remember, our journey started way back in December 2024. We started the Rico Forex Academy. Right now, we are building with the academy, and we are setting up Forex labs with computers and where we can have people do physical classes. Right now, we still do online courses. May we had about 100 students enroll on online. We have also VIP. We do Elite mentorship, which we released in November. Then we had over 500 students plus. We had students from South Africa, across the different world, and we have trained quite a bigger number of students here. So the Forex fundamentals are very important that you have to consider. And also the technical analysis and the masterclass is key here. So remember one thing here is that before we get into our last bit of it, please don't forget to check out our website at htreco.org, and also send us an email, support@Rico. And of course, thank you for being here and watching why most traders lose money. And also in our wrap up here, please wait and make sure that you mark your structure. And then at the same time, we mark structure, watch your liquidity, only enter when you have seen a confirmation. There is a professional trade, and there's also a professional trader. So remember that trading is not about predicting the future. It is about discipline. We have talked about the golden rule. Discipline. If you learn something valuable today, make sure you stay consistent. And also note one thing, that the market will open today and it will close, then opens the following day. For gold trading, it opens on a Monday to Friday, and never jump into the market because I want to make this big capital. No, take your opportunities. Opportunities never end, but capital can end if you carelessly put your capital and lose it. Protect your capital, trade smart, trade discipline, stay with structures, and I'll see you on our next live session. And of course, one thing that you should know is that don't trade to impress people. Don't live that luxurious lifestyle. Build something for yourself. Your goal to attain the journey to financial, or discover your financial freedom. Trade to build freedom. Don't trade to impress people. Trade to build freedom. And of course, avoid those dramatic engagements. Avoid those splash life on, or people flirting on the internet. Just trade with the goal for building your financial freedom. Yeah, thank you for watching. See you on our next live stream. Subscribe if you haven't, like, share.